Morning, Market Chameleons. Happy Thursday. How you doing, Dima?
Good morning, Will. How are you?
Awesome, awesome. We got a bunch of chameleons chatting. They're asking about Pelotar, Disney, some other things. So let's start with the
Sure.
disclaimer, and then we'll get going.
Okay. So, before we get started, everyone, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. They should be able to help answer your questions, provide you with guidance. That's what they're there for. There's the disclaimer. And with that, let's get started. I'm going to share my screen right now.
Awesome.
And Will, you mentioned a couple things. What were they again?
Well, Mike and someone else both mentioned Pelotar, and I'm going to mispronounce it. I think it's Pelotar. It's a newer company. We spoke about it the other day. They have earnings coming up. I noticed in the unusual option volume report, some call activity showed up in there, and I think Disney has earnings coming up as well. So those were two that popped up.
Okay, yeah. So we'll see if we could take a look at both of those. I think that, like you said, that first one, it's just IPO'd. I don't know if they even had this would be their first earnings report.
I think it is, yeah.
So there's no real history to take a look at. It'll be interesting, but like you mentioned, maybe there's something going on in the options in that space. So for today, what I wanted to do, we'll go over what's going on in a pre-market report. I also wanted to take a look at the S&P 500 and see how stocks are kind of reacting within the S&P 500. I also wanted to take a look at a comparison, Tesla versus Amazon. I'll show you why I picked those two. We'll do like a fundamental comparison, look at their ratios, see what the better deal is, or what we perceive is the better deal. And we'll take a look what's coming up in the earnings front, what the options are expecting as far as the earnings move goes. So with that, let's get started with the pre-market report. So these are stocks that are actively trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. Let's take a look. I'm going to filter this report for stocks with market cap of 20 billion or more. Excuse me, and see what's going on there. So using this market cap, I'm going to do $20 billion market cap or higher. And really quickly, one thing, I'm just seeing 19 made our percentage gainers list, 37 on a percentage decliners list. So at least from this report, looks like a little bit weaker opening based on these groups of stock. Is this PD? That's not the one we were talking about, right?
No, it's PLTR. It's about halfway down. It's the Pelotar.
Okay, so I don't know this PDD. That looks interesting, up 23.7% in the pre-market hours. Looks like they reported earnings, trading 1.5 million shares in the pre-market. Just really quickly scanning the headline news. So it looks like they beat and up 23%. JD up 4.3%. Let me take a look at this PDD just really quick.
It's a Chinese tech company.
Chinese internet company? Is that what it is?
Well, yeah, they provide some sort of interactive shopping experience through some sort of, I don't know if it's different types of values, not necessarily exchangeable dollars, but it's an interesting platform based in China that drives sales, but it's not actually using money all the time.
So what is it using, like a digital currency?
Yeah, like things like a currency they created for experiences. It's an interactive social shopping experience. It's something I've never seen. This is just the little bit I've read about it in the past.
Okay, well that's interesting. Well,
but 100% of its revenue is from the People's Republic of China.
Okay. Well, let's take it. So yesterday they're up 8.1%, closed at $111.46. It's trading $137.96 in the pre-market hours. That's up 23.8%. And we see that will be a new 52-week high. If it opens up here, this is the 52-week range, $30.20, $116.79, trading 1.5 million shares in a pre-market hour. VWAP in pre-market, $133.15. So we're about, a little bit over $4 above that right now. Here's the pre-market chart. So it looks like it just went straight opened up and it's kind of sitting here. Here's the news. I'll let you read it. Obviously, there's a report. They beat revenue. I'm not going to get into interpreting that. And is this a relatively new stock?
Well, the first earnings cycle we have on record is August of 2018. So it's a little more than 2 years old.
Right. So we see here, this is historical, 56% time it opened lower at the open, 44% higher. This is the average, 3.1%. Here we see on the average move in a pre-market, 9.2% in either direction, with a high move of 23.1% when it was down here on November 20th. So it's making that high move now in the opposite direction, up 23.8%. This is what it tended to do after the open. From the open to the high of the day, the average move was 6%. From the open to the low, the average move was 5.5%. So you kind of get an idea of the range that it trades during the day after earnings, and a little slightly favored to the upside than the downside. From the open to the close of the day, 56% of the time it closed higher, 44% of the time it closed lower, for an average gain of 1.2%. Again, this is a shorter history. It's brand new, so it's still, could be very, very volatile. But there you have it, PDD. I never even heard of that company, so I'll check that out.
No, either have I. It was an $18 stock in 2018, just an FYI.
Wow. All right. That's pretty impressive. I'm going to take a look, this is the unfiltered report, unless there's specific questions on this pre-market. I was going to take a look. I'm going to come down here. These are today's pre-market movers. I'm going to come down here. So below, we have the historical in the last 20 days pre-market movers. So this is a list of stocks in the last 20 days that made our list either because they were gapping up or gapping down. And of course, we have a threshold. It has to be a certain percentage and a certain amount of volume. So, something is up 2% on 50 shares and nothing else trades, we throw that out. It has to be enough volume and enough of a percentage move. So down here, we'll see there's about 3,273 entries that we saved from the last 2 weeks that were on our gap up list. And this is the gap down list. All right. So we have them separated: gap up, gap down, which would be, these are the gainers and the decliners. I'm going to take a look first at the gap up, and I'm going to filter this list by stocks that were in the S&P 500. So I'm taking this in ETF, and I'm going to choose stocks that are in the SPY holdings or S&P 500. And I'm going to also filter stocks that gapped up and had earnings. All right. So these are my two filters to show me stocks in the S&P 500 that had earnings and they gapped higher in the morning. All right. So this is what it is. So here, like, for example, McDonald's, they on November 9th, and they reported earnings. They were up 4.7% at the opening. And then what we do is track what would happen after the open. So it opened at $226.79 that morning. That was up 4.7%. By 10 a.m., the stock was down to $218.31. So that was lower 3.7% from the opening. All right. And by the end of the day, you could see the stock closed at $213.22. So actually, McDonald's, was off 6% or down 6% from that opening price. So that's what we're doing here, tracking. Well, what happened to stocks that reported earnings and gapped higher on average? Did they continue going higher? Did they stay unchanged, or did they end up going lower from that opening price? So here are the stats on that. These up here, these are the control groups. So this is just counting everything. Here's my filtered list. All right, 72 observations. So stocks that open higher by 10 a.m., 51% went higher in that first half hour, 49% lower. So about 50-50 with on average, the returns were unchanged. However, take a look at the by the close. So only 39% of them from the opening went higher. 58% of them, even though they gapped up, 58% from the opening closed at a lower price, all right, for an average loss of 0.7%. So they didn't hold on. So those S&P 500 stocks that look good in the morning didn't hold on to those gains on average. And these are the percentages. So now let's take a look at the ones that gap down. Did they do a reverse? So I'm going to use the same filters, S&P 500 stocks that had earnings, and I'm going to go to this gap down history, right? Let me just, for comparison, let me just see there's a total of 72 stocks on this list. All right, now let's go look at the gap down history. So gap down history, again, S&P 500 stocks, these are reported earnings, but in the morning, they were lower. What did they tend to do? So let's take a look. And here, I'll just go through it again. Here, like I'll just pick a more famous name like Win, right? Win opened down 2.8% at the morning. This one, by 10 a.m., it was up 0.4% from the opening. By the end of the day, it was at $80.07. So this one from the opening went higher by 2.8%. So let's see what happened on average. Okay, there was about 65 stocks that made this list. Here we have Amazon and Apple as well. So this is what happened. Those stocks that opened lower after reporting earnings, 40% of those stocks by 10 a.m. from the opening price by 10 a.m. were higher, 60% were lower. On average, it was unchanged. But here's the other interesting part, that only 37% of those that opened lower were higher by the end of the day. 63% of those continued to decline and open and closed at even a lower price. All right, 63% for an average loss of -1%. So look, gap down history, on average, 63% of them continued lower for an average loss of -1%. The ones that gapped up, almost the same thing. 58% of them were lower, negative, which is telling me that even in the S&P 500, whether was basically weaker, more selling, no matter if they look better or worse at the opening. The ones that were lower, people didn't come in there on average and scoop those up, and those on average continued to decline. Those that open higher, didn't continue up further. Those kind of sold off as well. So at least that's surprising to me, considering S&P 500 still floating up, but this looks like a weak signal to me, at least, from a perspective after reporting earnings. I'm going to move on to one more. I'm going to look at this snapshot here. So under option, is there any questions? Well, let me know before I move on.
No, you can move on, dude.
All right. I'm going to take a look at this. This is a snapshot picture of the S&P 500 sector ETFs. So we see here, these are the different ETF symbols. This is the sector they're in, energy, consumer staples. We see right now, implied volatilities have been declining. So these are the implied volatilities. These are the changes on the day. You could compare that to the 52-week low, 52-week high. So we see here, this is where it's at, 52-week low, 8.7, 52-week high, 63.1. This is the option volume in this ETF, consumer staples. Here's the IV rank. So we see here, right now, they're kind of considered moderate as long as they're above, like, I think, 33%, between 33 percentile rank, 66th percentile rank, something like that. They're considered moderate, but you could see they're getting close, to being, they're in the subdued. They're like, and here's actually, you could see a visual here. This is for each ETF. This bar represents the range for the year, the high and the low, and this little circle is where we are today relative to that range. You can see right now they're all like, nearing the low. So we still have that stimulus coming up. Of course, anything could change, but implied volatility right now is starting to really come in from this perspective. Here's the different, and down here we see the performance as a comparison in these industries. Another interesting, we were up yesterday. I went over here to the SPY holdings, and 200 out of the stocks in the S&P 500, 240 of them were up on a day, 3 unchanged, 262 decliners. So that's also kind of a little bit of a weaker signal to me, at least, that we were up, but when you compare the number of stocks up versus down, more of them were down, more decliners than gainers. Let me see how the Dow Jones did yesterday. Dow Jones, similar situation, 11 gainers, 19 decliners. So you can see here are the gainers, here are the decliners. The only one that didn't fall was this QQQ. QQQ was the reverse, 81%. Sorry, 81. It could be 81% because there was 100 of them, but 81 of them were gainers, 22 of them were decliners. So this one, much more positive breadth. But just wanted to show you this really quickly because we don't really reference these reports that often. If there are no questions on this, I'm going to move on to the, let's do the Tesla Amazon comparison.
Cool.
Okay. So here, what I was looking at is Tesla. I'm going to look at the key ratios here. So these are the key ratios for Tesla. And when I was thinking about, and you could compare, Tesla fundamental ratios to any group that you want or any stock that you want, but I picked Amazon because I thought they had two things similar. Tesla and Amazon, they're still run by the original founders who are visionaries, right? So these people are, have been driven by different visions for those companies. The founders are still there. And they're also two companies that really focus on top line growth. So you're not going to see, they're basically reinvesting and growing their revenues, expanding those customer base and expanding to where they look. So I was like, if we compare the two, let's see which one do we think is a better deal if we just judge it by those two parameters. So I'm going to come over here, put in a custom symbol, and I'm going to put in Amazon. I know they're not exactly competitors, but those are the two things that I found similar. And as we could see here, these are the valuation ratios, and they have very high Ps, and I think that's just because they're really concentrated on revenue growth, expanding their customer base. So that's one thing they have similar. Obviously, the Tesla in this situation has a way higher PE than Amazon. So when the earnings per share are very hard to compare, we could go to the revenues, right, and say, well, how much revenue are they generating in sales, like just raw sales, and how much are you paying over, right? So if a stock per share, if they're generating $2 in revenue, right, and you're paying $4 per share, you're paying 2 times the revenue. So price versus sales, that's what this is, price versus sales. So we see here Tesla right now is 15 times its sales, Amazon 4.59 times its sales, right? So when you're doing that, you've got to really price in that Tesla's revenues should be growing much faster than Amazon's, right? Because otherwise, why would you buy Tesla? if they're growing at the same rate, this one would be the better deal. Price to book value, again, Tesla, $24.66, Amazon, $19.02. So here, this I would say is the better deal because you're paying, you know, if you could get it for book value, that would be great. Usually you're paying above book value, but 19 times, if everything else equal, 19 times book value is better than $24.66. Remember, if everything else is equal, but we'll take a look at the growth. Price to tangible books, same thing, 25.49 versus 23.21. Amazon looks slightly like a better deal. Let's take a look. We'll talk about this PEG ratio as well, but see the PEG ratio here is lower for Tesla, which would tell me that the estimated earnings, this is where it's coming from, that the estimated earnings growth, right, earnings growth is projected to be faster in Tesla than Amazon. I'm not sure if, you know, but those are estimates, right? Forecasts. We don't deal with the forecast here. I'm just looking at the looking at the raw numbers, thinking everything else is equal. Price to cash. This is how much cash they have on the book and how much you're paying over, right? So if they have $1 in cash per share on the book, you're paying $2 per share. You're paying two times the amount of cash on the book. So that's for Tesla, $27.21, Amazon, $23.03. So Amazon, that looks like a better deal. These are price to EBITDA, similar to earnings per share, except this is earnings before interest, taxes, and depreciation. This is interest before earnings and taxes. Again, these two don't have much earnings. I'm going to just kind of keep going lower. Here's the PEG payback ratio. So this is based on earnings growth estimates. So these are analysts, whatever their models they're using to estimate earnings growth. And what this is saying is that if those earnings projections are correct, this is the amount of years it would take for the cumulative earnings to equal the price you're paying for the stock today. So in Tesla, remember, this is a big if those analyst earnings growth estimates are correct, it'll take 5 years for Tesla to make in cumulative earnings to equal today's stock price. For Amazon, it's 7.5 years. So in this situation, Tesla looks like a better deal. Of course, you have to have faith in those projections. Let's jump then to a different comparison. Obviously, Tesla on a valuation basis, to me, looks more richly priced if we're using these numbers. Gross margins. So these are what the gross margins are generating. You know, a lot of people look at that because you're like, well, if I'm generating X amount in revenue, well, how much does it cost me to generate that revenue, right? So you need gross margins. You need to make profits. And these are the gross margins of Tesla versus Amazon. So we see Tesla 21.1%, Amazon 25.2%. You want higher gross margins, so Amazon there a little bit better than Tesla. EBITDA margins similar, Tesla maybe slightly better. EBIT margins looks like Amazon's better, 6.4% versus Tesla's 5.8%. Net margins, Amazon 5% versus Tesla 2%. And I would expect these to be low if you're growing your revenues, right? Because you're just reinvesting those earnings. Return on capital here, Amazon's doing better, 13% versus Tesla 4%. Return on assets, again, Amazon's doing a little bit better, 7.2% versus Tesla 1.4%. Cash return, Amazon's doing better, 1.6% versus Tesla. So far out of these two, we looked at valuation ratios. Tesla to me looks more richly valued using these numbers. Profit margins, Amazon to me looks slightly better than Tesla's from the historical perspective. I'm going to jump real quick then to growth. So this is where there should be a difference to justify these. And this is only looking at historical growth, not projected growth. So you see here, Tesla, here's the big one here, revenue growth. They grew it on average so over 5 years, 50.4% versus Amazon 25.8. So there you go, their growth in revenue was twice as fast as Amazon's. So there is some justification there if you're looking at that number. Will it continue? That's the big question, but at least there is some justification over here in the growth. The gross profit, though, annual growth, Amazon still beats it out. So, here's really the big one, the revenue growth. That's where the big difference is, and to justify, this handicap. Look at the 5-year averages, gross margin, 5-year average. Tesla, Amazon is a little bit better. They're close, but Amazon's a little bit better. And to me, I think Amazon's a little bit more diversified. What do you think? I mean, Tesla's,
I would think so. Yep.
It's a little bit more diversified.
Well, I would say, I mean, you look at it, could be hard to say because Tesla's in the batteries, but certainly Amazon is all over the place. I mean, they have, they're in the whole cloud computing space. They are in a lot of different markets. I mean, so.
Yeah. If you look at Amazon, the spaces they get into, they're either very competitive or a lot of spaces they'll just dominate, that they get into. Again, I'm not saying anything bad about Tesla. The car is beautiful. I love the car, and people who buy the car absolutely love it. I've never heard of anybody who owned a Tesla who didn't love their Tesla. So
it's like it's almost a religion. I mean,
they're following. The people are very committed to those Teslas, and I'm confident everybody I talk to who bought a Tesla will buy another Tesla. So I'm not saying anything bad about the company. I'm just looking at it from a perspective of, if you're going to take a risk with your capital in an investment, just making a comparative analysis, nothing about the product here. But if you could see here, and I'll let people, you could make projections or look deeper into like what they're planning for the future. Maybe one of them will revolutionize something more than the other. But you have two visionaries, you have two companies who are looking, to grow their businesses top line, different industries. But here's just a quick look at the fundamental ratios and one way to analyze it.
Yes, I mean, Stefan, one of the chameleons on the chat, just mentioned, and it's so right. He's saying it's just like Apple, right? I mean, Apple has a real cult following as well.
Apple, Tesla does exactly. And Amazon. I mean, people who use Amazon, they shop Amazon, all the time. I know we get packages from Amazon all the time. So and probably, you could probably put maybe Netflix and Google into there. I think Amazon even competes with now Netflix, right? They have that Amazon Prime Video, like you get the videos, and they actually make their own content. I think they pay for original content as well. Anyway, that's really quickly. I didn't get to the earnings today. Unfortunately, we've got only 2 minutes left, but I wanted to at least show this challenge, Tesla versus Amazon. Hopefully it was helpful to people.
Great. Someone did have a question about the stock threshold list. Maybe we can get to that in the future. Thanks for joining, everyone. Great show, Dima. You bring it every day. No one's gotten back to me on my background yet, and I know we're missing Jake. But if you send me where this background is, send it to my email, William McBride, what city around the world and what chameleon lives in the city. I will get you a chameleon cup if you're the first one to get it to me. How's that sound, Dima? All right?
Yep. Sounds awesome. Thanks, right. Will. Thanks everybody for joining us.
Have a great day, Dima.
Thanks. You too, Will.